what is the bank, UBS's working assumption here? We're going to go 21 down to 15, 21 down to compromise 16, 17, or where?
Well, we think that at the very least, the cuts will be extended, right? The corporate tax cuts will be extended and probably made permanent as well. Now, the degree of the further reduction, that is subject to debate because of the fact that your fiscal deficit right now is standing at about 6.8% of GDP. And if you extend it further and if growth doesn't kick in, then you're going to have a big problem because then obviously...
So this is subject to debate in Congress with lawmakers who are up for, many of whom are up for re-election in next year's midterms.
Absolutely.
So how's that going to go? You
can't go on spending without thinking about the implications of that because when we look at fiscal deficits, we look at it as a percentage of GDP, right? So your expenditure might be here, but if your growth kicks in and your GDP growth is actually growing, then fiscal deficit as a percentage of GDP might actually decline. So it's all dependent on how strong your growth is. Now, if you put that into consideration and you consider the fact that they are likely to actually impose tariffs as well, which in turn could probably slow down the U.S. economy, then you've got to be very careful here and you can't really cut as much as you want.
Okay, does that mean then, net, that not just tax cuts, but the entire agenda, Trump is going to get some, maybe much of what he wants, but not all? And a lot of the stoppage is going to come in Congress because of politics.
I would think that 15% is way too aggressive. That's lower than a lot of the Asian countries as well, right? So I think there's got to be a compromise somewhere. And I think extending it and making it permanent to 21% is already doing a lot for the U.S. economy in that sense. But bringing it down to 15%, I think that's...
So the Fed put is still a go then, you're saying?
Absolutely.
How many cuts, though?
Well, we still think that there'll be 2 cuts, but increasingly the market is pricing in only 1 cut, and it's actually towards the end of the year, right, in that sense. But we've been pretty much comfortable with what we saw in the CPI numbers just a couple of days ago. And it seems that the current trajectory is actually still trending downwards where CPI is concerned. But the problem is when the tariffs come in, right, if the tariffs do come in, people, consumers, manufacturers, importers are likely to front load and build up their inventory. They're not going to wait until the tariffs kick in.
Hold on. I got to ask you, right? Are we barking up the wrong tree talking about benign inflation and, a nickel and diming all the data we had out overnight? Because when you take a look at what's been happening with yields, it's really, okay, I wouldn't say unprecedented, but we haven't seen something like this happen in probably close to a generation, 40 years, not 50 years, but 40 years,
Absolutely.
Right? Which is... Since the Fed has started cutting rates, 100 basis points, yields have gone up by even more, going the opposite direction. Not all of that can be inflation,
Absolutely.
right? Some of this has got to be the term premium and maybe Trumpflation.
Yeah. So the bond markets are pricing in stagflation, right? Because the last time we saw an inverted yield curve, no recession, and then a bear steepening was in the late 70s and early 80s, right? I think that's a bit too overdone. I think that at this point in time, the U.S. economy is still pretty much in good health. You have unemployment rate at 4.1%. You had non-farm payrolls generating 220,000 in jobs. So the growth part is actually pretty okay. But the problem is that come towards the second half of this year, spending might drop because of the fact that, you're not going to get a significant pay increase from here on. And therefore, if the consumer pulls back, if global trade slows down, then obviously the U.S. economy will be impacted as well. But at this point in time, the data doesn't seem that way. But you never know, right?